Welcome back everyone to the Audacious Money Witch channel where we talk about investing and trading and a lot of fun things. In today's episode, I'm going to talk about the real world AI. Tesla is working hard on. The robo-taxi is coming to your neighborhood in Hollywood, California. And why Tesla stock could take off despite the fact that hard landing is upon us. And the yield curve disinversion is happening after the longest inversion in history is over. On July 23rd, Tesla reported that Q2 earnings revenue totaled $25.5 billion, up 2% beat analyst prediction. However, Tesla stock dropped 7.7% in August, but things are about to change again for Tesla. As analysts await the robo-taxi event, updates around Tesla's strategy, new products, and EV demand, the number one question for investors today should be, is Tesla bottomed? Tesla announced it achieved record quarterly revenues despite a difficult operating environment. However, Tesla's gross margins fell 23 basis points to 18%. This comes after CEO Elon Musk on the Q1 earnings call said that if somebody doesn't believe Tesla is going to solve autonomy, that they should not be an investor in the company. The Tesla chief doubled down on his line on the Q2 conference call. Going into the Q2 earnings report, investor sentiment had been upbeat, with Tesla surging more than 25% in July after the EV maker announced a surprise second quarter beat in vehicle deliveries. Tesla has been stepping up rhetoric about full self-driving and AI. That messaging has been on full display during the company's quarterly earnings in 2024. Musk kicked off the Q2 earnings call by saying that executives won't get too much into the product roadmap here because that is reserved for product announcement events. Musk said on July 23rd the robo-taxi unveiling event had been pushed to October 10th, back from the previously scheduled August 8th date. I wanted to make some important changes that I think would improve the vehicle. The robo-taxi. The main thing that we're going to show, and we're also going to show a couple of other things, Musk said. So moving it back a few months allowed us to improve the robo-taxi, as well as add in a couple other things for the product unveil, he added. On April 28th, Musk said Tesla will spend around $10 billion in 2024 in combined training and inference AI, the latter being primarily in-car. The company has said it plans to ramp up its AI infrastructure capacity in the coming months, and that it is currently working on ride-hailing functionality that will be available in the future. This could potentially put Tesla in competition with Uber and Lyft. Meanwhile, Cathie Wood and her ARK Invest on June 12th updated its Tesla stock price target to $2,600 by 2029. Wood has long been bullish on Tesla autonomy push and robo-taxi aims. ARK Invest estimates that around 90% of Tesla's enterprise value and earnings will be attributed to the robo-taxi business in 2029. Without robo-taxi network and business, ARK Invest says its Tesla price target would be around $350 per share. We remain confident that the service will launch within the next 5 years, ARK Invest said. Tesla added last month that its plans for new vehicles, including affordable models, remain on track to start production in the first half of 2025. That suggests that mass production won't start until late 2025 at the earliest. Meanwhile, Tesla also said in its July earnings report that its vehicle volume growth rate in 2024 may be notably lower than the growth rate last year. Tesla said that growth in its energy storage business should outpace its automotive segment. Musk in the Q1 earnings call said he expected 2024 vehicle deliveries to grow compared to 2023. The EV giant saw deliveries in 2023 hit a record of 1.81 million. Analyst consensus has Tesla Q3 deliveries totaling 458,000 units, up more than 5% versus Q3 2023. This total would represent the third best quarterly delivery total ever for Tesla, behind Q2 2023's 466,000 and Q4 2023's record-setting 485,000 deliveries. Analysts project Tesla matching its record total in the fourth quarter, meaning unit sales would be flat compared to a year ago. I see around 40% upside to Tesla stock for the rest of this year, and I believe Tesla is managing risk around its automobile business and cornering the market on zero-emission vehicle credits. While Tesla is still making cars, we think the company is aggressively deploying incremental resources, technology, people, and capital away from the auto side of the house. At the same time, Volkswagen announced that it is considering closing factories in Germany is unprecedented in the German automaker's 87-year history. Such plant closures were considered off the table for the company. To make matters even worse, for the 680,000 Volkswagen employees worldwide, the management also feels forced to end its job security program, which has been in place since 1994, and prevents job cuts until 2029. Volkswagen Group CEO Oliver Blume added that the European automotive market is in a highly challenging and serious situation, and that Germany has fallen behind in terms of competitiveness. Competition between Tesla and Uber appears to be heating up, with Tesla scheduled to unveil its robotaxi on October 10th, and claims it is currently working on its own integrated ride-hailing service. Tesla exports the Model 3 and the Model Y vehicles from its Shanghai plant in Europe, with 6-seat Model Y coming. Almost single-handedly, Elon Musk has turned the auto industry on its head. He has essentially forced it to get aboard the electric vehicle train. Tesla's been a monster stock over much of its history, especially during its stratospheric run from mid-2019 to late 2021. Investors appear to be awaiting the October 10th robotaxi reveal event. Tesla is going to hold that event at the Warner Brothers studio in Hollywood Hills, California. The obvious reason why Tesla would use a giant movie studio to release their self-driving car is because Warner Brothers has a lot of fake street in that movie set, which means Tesla has a lot of driverless taxis driving in the real-world environment without having to worry about laws and traffic accidents. Everything can be as planned. Tesla said it will launch its full self-driving driver assistance product in Europe and China early next year. FSD service, which comes as a paid add-on feature for Tesla customers, is slated for launch in the 2 regions in Q1 of 2025, pending regulatory approval. Tesla is yet to receive the regulatory permission to launch its FSD product in Europe and China. But Musk in July said that he expects to get this clearance by the end of 2024. Then we have actually Smart Summon. This was a redesign of the Smart Summon feature back in 2019. Back then, FSD wasn't a thing, so it doesn't work very well. It caused some chaos. Tesla finally corrected its past mistakes with the actually Smart Summon. It now can come to your location without a person in the seat, but also drive away and park itself. Like magic. Shocking, right? Cybertruck Auto Park, eye tracking with sunglasses, end-to-end network on highway, and finally we have Cybertruck FSD to end this September. In October 2024, we will have Unpark, Park, and Reverse in FSD. Also, FSD V13 with 6x improved miles between necessary interventions, which is going to be ready on the Robotaxi October 10th. We are having the longest yield curve inversion in U.S. history. It has just ended 783 consecutive days for over 2 years. The longer-term 10-year Treasury yield has had a lower yield than the shorter-term 2-year Treasury yield and a typical alignment. But today we're back to a more normal upward slope. The 2-year Treasury yield of 3.76% is currently 1 basis point below the 10-year Treasury yield of 3.77%. What does this mean for the economy? Historically, the flip back to a positive sloping curve after a long inversion has occurred near the start of recessions. March 2007 flip back, recession began 10 months later in January 2008. December 2000 flip back, recession began 4 months later in April 2001. June 1989 flip back, recession began 13 months later in August 1990. May 1980 flip back, recession began 3 months earlier in February 1980. But here's where it gets interesting. The yield curve remains highly inverted if we look at the shortest end of the curve. With the 3-month Treasury yield of 5.18%, far exceeding the 10-year Treasury yield 3.77%, that's been negative for a record 681 days and counting. When will that streak end? Only after the Fed starts cutting rates, which is expected to begin in 2 weeks at the September 18 FOMC meeting. But the first rate cut is only anticipated to be 0.25% or 0.50%, hardly enough to uninvert the full yield curve. So unless the Fed starts aggressively cutting rates, the 10-year 3-month inversion will likely be with us for at least a few more months. And if they do start aggressively cutting rates, that would likely happen because the Fed is seeing signs of an incoming recession. Then I am sure we will have more opportunity to buy in the red.